oil tanker owners, they were hit hard by the drop in oil demand and a glut of ships on the market. But today, with the Federal Reserve saying that the U.S. economy is improving modestly and with demand already rising in China, is a turnaround in the works? Well, let's explore that issue. Nikolas Tsakos is the CEO of the tanker fleet operator Tsakos Energy Navigation, one of the largest energy transporters in the world. Nikolas, welcome to the program. Very good to have you with us. So are you seeing an improvement in the tanker business?
Well, I think after the seasonally very low second and third quarter, we have seen the market rebound to healthy rates. We're far away from the hundreds of thousands of dollars a day ships were making just 24 months ago, but at least they're in the tenths of thousands of dollars, so they're easily covering their operating expenses and also allow profitability to be maintained. So I think it looks that we are we have weathered the storm, the worst of the storm so far.
Now, when you take a look at Tsakos, your ships are kind of split. I know you have one liquefied natural gas, LNG ship, but you have some that are crude carriers and then there's some that are product carriers. Where are you seeing strength in the market?
Well, going back to your point, we are a client-oriented company. The majority of our fleet, 70% of our next year's income is fixed, 50% of 2011. So we actually operate vessels that our clients, the major oil companies, want us, and that's why we are split, as you said, in the middle. We are seeing a strong recovery on the crude side. As we speak right now, we are seeing a lot of delays because of new tonnage in the Mediterranean and bad weather in the Bosporus Strait. So we're seeing rates going from something like 10,000 back in September to about 35,000 today. So that's a welcoming sight on the crude. We're seeing a betterment on the products trading to the east. As I think today you got the good news on the Beige report. But,
right, the Beige book report, exactly.
But then you got the not so good news for shipping or oil, that inventories have really risen significantly, mainly on the distillates and gasoline. So we're seeing less and less demand in the last period for products in Western Europe and North America and more in the Far East.
Talk about that whole storage issue. I mean, something like what, 3% of the total world's fleet is being used to store crude and crude products,
and growing. It's and growing. I mean, it seems that people expect that we are going to have a recovery sooner rather than later, or at least some sort of going forward to the world economies. So you have about a $9 difference, which what they call a contango, between what people believe the oil of prices is today and what it will be a year down. With shipping rates being really low, it makes sense for many people to just use them as storage tanks.
Floating storage.
So yeah, it's much cheaper and less environmentally painful, and to have the vessels there and much more flexible.
What about the new vessels coming to market? I know that you've taken delivery, I believe, of 2 ships, or you'll have a second ship coming very soon. But you also, the way you buy these ships is you try to buy them for the least amount of money, and sometimes you even you'll have options that are just sitting out there waiting to see whether it's advantageous. Bring us up to date.
Well, we as a company have always tried to build our ships. We have built 55 vessels, spent in excess of $3 billion in the last 12 years. And we started our new building program back in 1997 when we had the Far East crisis. That was the first phase of our new building program. Then our second phase came after 9/11, where in 2001, 2002, we had again a big correction in new building prices, and that's when we took a lot of options going forward. The last actual contract we signed was in August of 2004, but we're still taking delivery of those ships, so we're well in the money. It's been a very busy quarter last quarter. We chartered a lot of our tonnage out. It's positive that the major oil players have a big appetite to take good quality tonnage right now, so it seems they feel that we have reached a very low part of the cycle, and at the same time we sold 2 of our ships just last week.
Congratulations. What about the balance sheet right now? The last question for you. Balance sheet?
Well, our balance sheet is a very healthy balance sheet. We have close to $350 million in cash that allows us to make an acquisition if the market remains soft and the price is close to $800 million.
But you're still waiting to make those. I mean, you want to see what happens. You think there might be a little bit of...
We are trying to be careful.
Opportunistic?
Opportunistic and careful. We sold 2 of our ships and ordered 2 replacement vessels for delivery in 2011. But we have stayed away from the big bulk of ordering.
All right. Well, we're going to have to leave it there, but look forward to having you back in the future. Nikolas Tsakos of the Tsakos Energy Navigation. Appreciate your insight into the world of shipping and tankers.